Eric, we just got the news about the Supreme Court, and the world is trying to figure out what this means. What do you think?
It's really a big move. The market reaction initially after the announcement's been fairly muted, both for stocks and for bonds. But it's really something that's likely to have an increasing effect on the economy over the next 6 months. The tariffs, they were having several meaningful effects on the financial system. It was leading to higher inflation pressures. It was putting pressure on corporate profit margins, and it was leading higher costs to consumers. With the tariffs potentially being repealed away, this could really have a sustained, gradual boost on the markets and the economy over the next few months.
I had wanted to focus on, what do you expect to hear from President Trump during the State of the Union, but I got to stick with this tariff theme because I'm listening to the pontificators on traditional financial television news talk about, oh my God, how are they going to do the refunds and all of that? Have you thoughts on this? Will this be an impediment to going forward for this economy, those refunds?
Well, it's likely to be a messy process. There's a whole new legal cottage industry, I think, that was open today. But yes, it's going to be a messy process. And I think where a lot of the pressure is going to reside is in terms of the federal budget. Basically with this tariff announcement, we've opened up a hole anywhere between 175 billion to 300 billion in the fiscal budget. That's going to need to be addressed in one way or another. And more likely than not, it's going to be from the short-term funding market, short-term treasuries. And that's likely to have a feed-through effect to the bond market because, that increased borrowing, that's going to need to be financed one way or another, and that's usually through higher short-term rates. So we could see some volatility and some disruptions that come from this process as it plays out over the next few months. But one of the things that I always like to go back to is that the financial markets and the financial system, they have an uncanny way of being able to adapt. And there can be shocks that take place initially or unexpected outcomes. But the market has a really good way of pricing in those types of adjustments. And, really more on a positive side, you have financial analysts, you have lenders, you have all different operators in the financial system that are basically taking out their pencils right now, sharpening them and going back to their statements and their projections and their models. And they have new inputs to put in, and those new inputs are likely to be positive from a forward valuation perspective.
Okay, I want to talk about that. I also will bring up the recent Treasury auction, successful 30-year Treasury auction, not short-term, obviously, but it shows demand for the U.S. dollar. It was still there. But I want to ask you about the refunds very quickly. Shouldn't I, the consumer, and I'm talking about 340 million Americans, not just me, shouldn't we be the ones who get the refund, not necessarily the companies that passed on that cost to us?
Yeah. Theoretically, it'd be nice if it worked that way, and I'm sure there's going to be some legal challenges in order to try to reclaim that money. But I think one of the biggest questions is how do you quantify that? How do you quantify, exactly how each consumer was affected? Does that and there's also a political aspect to this as well, which is something that will really be interesting to see how that's seized upon in the coming days. We have a midterm election that's coming up in November, and the polls are suggesting that we might have mixed government by November. There's a real opportunity not only on the Democrat side of the aisle, but also on the Republican side of the aisle to seize this as a political issue, to recognize that, hey, there were consumers that were affected by these tariffs that were put in place that have now been struck down in a court of law. What are the options for consumers, and how do they go about trying to not only receive that money back, but also even quantify that? And that seems like a process that's likely to be fraught and drawn out, if anything at all. But there may be some political solutions that are devised along the way to try to pad that pain.
Already members of Congress, a few, I think it's just one actually, calling on, the House needs to pass legislation to reinstate the tariffs. You think there's any traction or the ability to get that through the House?
I don't think so. Once you get a ruling down from the Supreme Court, this was the tariff situation was something that was already in certain respects from many perspectives looking for a way out. It hadn't really played out the way that it was sold in terms of the revenues that were going to be generated. There was a paper that came out of the Federal Reserve recently that talked about how 90% consumers in the U.S. were absorbing 90% of the increased tariff costs.
Well, let me interrupt you because Hassett from the White House dismissed it, said it was bogus. But then we had, acting Federal Reserve Bank president saying, no, it's quite accurate.
Well, it's the former professor in me. Academic research, not to say that research can't be wrong, but it's a pretty rigorous process. I think it's tough to just summarily dismiss research that's come out not only from the Federal Reserve, but it's come out from a lot of circles. And I think the other thing is just the bottom line. There has been higher prices that consumers have been forced to absorb. So even if we dismiss the academic research from the Federal Reserve, the reality of it is that consumers have been feeling the pain of higher prices through the things that they're saying that they're experiencing in their own lives. You can't dismiss that.
So when President Trump says he's winning the affordability issue, how do you interpret that? How do you respond to that?
It's a tough argument to make, and we saw President Biden go through the same challenge, so it's really a nonpartisan issue. You can tell your electorate that you are not feeling the pain of higher prices, but when your electorate is feeling the pain of higher prices, it's hard to deny. And that's a challenge that President Biden confronted in the aftermath of the COVID crisis when we had the huge inflation outbreak in 2022. And even though we're not seeing it in the inflation data, a lot of the sentiment figures suggest, and a lot of the polling data suggests that consumers are feeling those higher prices. They're not feeling the affordability the way that it's being presented to them. And when you get inside of some of the pricing data, whether it's from the CPI, whether it's from the Personal Consumption Expenditures Index or the PCE, or some of the independent inflation data, it may not necessarily show up in the headlines, but when you get under the surface and some of the details behind it, there's a lot of embedded inflation that's taking place in there. And that's likely where the consumers are feeling that pain and expressing it in the polls.
As consumers, will we truly see prices come down with the tariffs being thrown out by the Supreme Court? I mean, will a car cost me less if it's an imported vehicle? Will the parts that I need to buy to repair a car cost less? And if so, when will that kick in?
Well, I think consumers might not see it the way that they would like. I think about it when the Fed lowers interest rates. It's funny how that works. The interest on your savings account or your money market account goes down almost instantly. The interest rate on your loan to the bank goes up almost instantly. But it's funny the other way around. When interest rates go higher, or the interest rate on your loan can take time, but the interest rate goes higher from the Federal Reserve. Well, we'll get around to raising that interest on your savings account over time. I think we're going to see the same type of thing where, yes, maybe prices don't go up as much, but it's pretty hard for a company that's already set prices at a certain way and consumers are expecting it to say, okay, we're going to lower prices now. Maybe it's just like, okay, we're going to slow the rate of price increases because consumers have already made the adjustment.
All right, looking at the market, this is a long-term positive or just short-term positive for those of us who believe in the U.S. stock exchanges and invest our 401ks or even personally in different equities?
I think it's a meaningful long-term positive, and here's the reasons why. We're already operating in an economy that has been growing well and has shown consistent growth. Are we seeing weakness in the job market? Absolutely. But we're in an environment where inflation numbers have been persistently reasonable. They're not gone back to the pre-COVID era, but the persistently reasonable inflation with a strong economy, which helps drive revenue growth. And we're seeing profit forecasts for 2026 into 2027 with companies growing earnings at double digits. That is the mother's milk for higher stock prices. Now we've just had an event in the Supreme Court ruling that are going to have analysts across Wall Street and investors across the country that are going to go back and redo the calculations and say, hey, the cost of capital has just gone down from our previous calculations. The profitability and the profit margins of these companies that we own now is likely to increase in the coming months as the adjustment from these tariffs going away feed through to the markets. That implies wider profit margins, that implies higher corporate profitability, that implies higher stock prices. So this, if anything, on the margins is something that we've seen a muted market reaction here today. That might pick up some steam as the day goes on. But in the months ahead, we're going to see it feed through the numbers that investors like to see to help drive stock prices higher.
And I'm going to switch real quick because I brought it up earlier. How do you interpret the recent 30-year Treasury auction? It's being called a success. What does that mean for those of us who are just average kinds of people?
One of the things that's been really reassuring as we went through 2025 and it's continued into 2026 is that, with the threat of higher prices, with the threat of inflation, coupled with, we had the recent news out of China that they were going to scale back on their Treasury purchases and their Treasury holdings, never mind the fact that they've already cut them in half over the last 12 years. That question of what's the supply and demand imbalance. The long-term Treasury market behaves differently than the short-term Treasury market. And one of the things that we've seen throughout 2025, despite the announcement of tariffs, and despite the concerns about higher inflation that could come with those tariffs that have now since been repealed, we've seen Treasury yields move steadily lower throughout 2025 into 2026. That suggests that there is a sufficient level of confidence from institutional investors and from overseas investors to continue to see the United States as a safe haven destination of capital and get paid a much attractive yield today here in 2025 and 2026 than what they were receiving before the post-COVID crisis period. So if anything, there's good reason to continue to be confident. That doesn't mean that we're not going to see volatility and risk along the way and maybe some latent inflation pressures that continue to threaten that area of the market. But it is a broader sign of confidence that if we have stability in the long-term Treasury market, that provides added stability to equity markets to sustain what have been higher valuations in recent years because interest rates remain at a reasonable level for long-term U.S. debt.
Last question for you. You are an advisor to President Trump.
Okay.
What would you tell him to say during the State of the Union? And then you're not an advisor. What do you expect him to say during the State of the Union?
So what I would tell him to say is be empathetic. You have an electorate that is frustrated with the affordability issue. Don't tell your electorate that things are more affordable. Empathize with the fact that they're struggling with the affordability. You have a tailwind. It may not be the tailwind that you wanted, but you have a tailwind at your back now because these tariffs have been repealed, that there is going to be an easing on those pricing pressures. Allow that to manifest itself and give empathy to your potential voters in the meantime. What he's actually going to say, it's part of his style. It's one of the reasons that he had success in business, and it's one of the reasons that he's president of the United States, because he has a certain approach, an emphatic approach to want to fight. And I suspect that when we go to the State of the Union, we're going to see some fighting words, and it'll be interesting to see how the country and his voters respond to that.